Welcome, everybody, to the Chinchilla Pickin' Podcast. It is January the 14th, 2024 at 2:04 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only Baron of Bonds, Brandon Beaver. Brandon, how are you, man?
I'm just sitting here wondering how you're going to argue with me about numbers. We're both looking at the same numbers for banks, and you're telling me that they beat.
So if you guys don't know what Brandon's talking about here, since we're getting right into it, we meet about usually 5 minutes before the show, and we tell each other this is what we're going to talk about. This is where I'm going to go with this, but we don't actually discuss anything. So he had told me what he was going to talk about and the direction he wanted to go with it, and I said, "Well, you're wrong already. We're going to have a disagreement about this." And so, and it was a statement about one particular company. So we'll get there in time. We will get there in time, man. We'll get there in time. It's been very cold. Can we do a minute of fluff? Just 1 minute of fluff.
Right, blah blah blah. How about them Cowboys?
All right. Well, I guess that's how you feel. It's been very cold. It's been hitting a lot of things. It's definitely hitting the energy bills of a lot of people. I've seen a lot of people have higher energy bills right now than usual. So make sure you're checking your accounts. Make sure you check your battery in your cars if it doesn't start. Batteries don't last forever. They do eventually go out in your vehicles. So every now and then you do need to replace it. Make sure this is not the year for that. All right, Brandon, let's get to it.
All
since
right.
you really want to.
Let's jump right into it. JP Morgan earnings. The bank's fourth quarter profit fell by 15% year over year to $9.3 billion. This was lower than analysts surveyed by FactSet and other analysts had expected. Earnings per share came in at $3.04. This was well under $3.35 estimated by FactSet. However, JP Morgan just notched its most profitable year on record. Revenue is up 23% for the year to $158 billion in 2023. Profit grew by 32% for the year to $49.6 billion. And here's why they missed. If you're looking at the unadjusted earnings here, the FDIC spent about $23 billion last year to clean up the mess that was Silicon Valley Bank and Signature Bank and their collapses. It was large banks that had to foot the bill. JP Morgan's profit was dragged lower by a one-time $2.9 billion charge. And that's a charge that the bank had to pay related to the crisis. Now, without that payment, JP Morgan had its earnings, if you adjusted it to take that number out, closer to $3.97 per share, which would have blown the estimates away. Now, the interesting fact about this, JP Morgan's spokesperson said that FactSet and other analyst estimates did not include that special fee in their forecast. I don't know why they didn't. Not hard to see that was going to happen. I mean, we knew all year that was going to be included. So,
okay.
Go ahead, Dave.
Let me know when you're done. Let me know. No, I want you to finish. Go ahead.
Okay. So a JP Morgan spokesperson said that, to be clear, our net income was reduced by 74 cents per share because of the FDIC special assessment. That spokesperson in the email said Friday morning that they reported an earnings per share of $3.04, which may initially look like a miss, but many analysts did not include that 74 cents per share were paid to the FDIC. JP Morgan scored 27% last year. This was the best of all banks in the United States. Go ahead, Dave.
Thank you for that last statement there, that this was the best of all banks that have reported yet.
Yes.
From last year, because you have P&G and Goldman Sachs reporting tomorrow. You have a number of other banks reporting next week as well. So of the ones that reported yet, yes, JP Morgan is the belle of the ball so far. You're right. Their quarterly profits for Q4 fell 15% due to the DIF, which is, let me get the actual explanation here. It is the government's deposit insurance fund.
Yeah.
So all the banks that reported last week, they all combined to go ahead and put $8 billion to refill the government's deposit insurance fund, which took a $16 billion hit after Silicon Valley Bank and other lenders failed last year, right?
Yeah.
Let's go to JP Morgan. So they did quarterly profits fell 15%, but like you said, they had a record annual profit, right? So how did they get the profit with the quarter with just the Q4 falling so much, right? It's because they had a 19% jump in NII, that is net interest income. And net interest income, the definition is the difference between what they earn from loans and what they pay to depositors. Because of the higher interest rates, and the fact that JP Morgan at that time did not raise their rates to be competitive with Robinhood and all these other companies, they had a higher net interest income. And so they had a 19% jump in that net interest income, the amount of money they earn from these loans versus what they pay to depositors. So that's basically their profit. That's what set those numbers higher. So JP Morgan had a record profit, even though they had a 15% loss in top line number revenue on the Q4.
Yeah, so it kind of makes me wonder how the analysts missed that.
Counted that these banks had to pay that back. And
Yeah.
I feel it's like it's a little unfair that you're making these banks pay that back, but when they're not part of the Signature Valley Bank failure, but they did buy up some of these chunks of what the bank had left over.
Yeah.
And so maybe that's the reason why they're making them pay some of this back, because they bought up the pieces that fell apart. And so since they only covered 8 billion of the 16 billion, I'm interested to see what PNC and Goldman Sachs have to pay tomorrow on their earnings calls. And then because we saw the numbers from these banks on Friday, come tomorrow, you should not expect good earnings from Goldman Sachs and PNC. So they should, in all theory, actually not tomorrow. They report Tuesday. Everything's closed tomorrow. I apologize. They report Tuesday. Everything's closed tomorrow. So in theory, you should see on Tuesday morning, once pre-market trading is available, that Goldman Sachs and PNC drop. That they drop in share price. If they did not drop already on Friday, I don't have it up in front of me right now. You should see a drop in those share price because the earnings expectations should be lowered. Now, if Goldman Sachs comes out and says the same thing that JP Morgan did, which is, hey, we did not raise how much we're paying our depositors, but we just kept that extra interest payments, that might be a good time to buy Goldman Sachs off of these good news.
Yeah, well, somebody's going to have to pay it. The Federal Reserve just recorded a $114 billion loss for the year. This is the second year that the Federal Reserve recorded a loss, which, by the way, I think every other year on record they've been profitable. But $114 billion loss in the Federal Reserve last year, mostly stemming from the banking crisis and that bailout.
Right. And so this is what JP Morgan had to say about some of that. Jamie Dimon of JP Morgan's, he said that consumers were still spending and the markets were expecting a soft landing, but he warned the government spending could continue to push prices higher. So the government has to continue to spend to make up for that loss so they could continue to have money, and then they're just going to push this inflation higher. Basically, he's giving a warning, hey, don't count the inflation out yet, is what he's saying. Now, how much you actually believe in JP Morgan, I don't know, because sometimes he says stuff in order to move markets so he could get a better deal. He has come out in past recent years and he has been saying that Bitcoin's a dog, Bitcoin's a dog, Bitcoin's a dog. And then every time Bitcoin drops, his company goes and buys some. So, I mean, what's he really trying to, now, we all know bankers have been doing this for years. Mad Money, Jim Cramer has confessed that he did this. He used to do this all the time.
When he worked
says
for
a banker, yeah, he said bankers have been doing this for all time. They'll go out there and move markets one way so they could get a better price and do it. So is JP Morgan coming out saying, hey, look out, we still may have inflation coming out, and should we believe him, or is he just trying to move markets?
I don't know. But Bank of America also paid $2.1 billion to the FDIC. They reported fourth quarter earnings of 35 cents per share. They said without that one-time charge, it would have been 70 cents per share. Expectations were for 53 cents per share. So without the one-time charge, they would have beat. Citigroup paid $1.7 billion to the FDIC. They reported an earnings loss of $1.16 per share. So this is the dog here. That was way below the estimates of 11 cents per share. Fourth quarter earnings would have been 84 cents per share without the one-time loss. So still, even for them, would have beat. Go ahead, Dave.
Couple things about Citigroup here. Now, they're not just the dog of the banks. They are the dog with fleas of the banks right now. All right. So they had a dismal quarter.
Yeah.
They had that.
$800 million loss in Argentina.
That's exactly where I was going. They stockpiled their cash. They've been trying to do it to cover the currency risks in Argentina and Russia because they've taken losses and hits there. And that's where bad investment has hurt them. They are in the middle of a turnaround. They're continuing to cut jobs. They have plans to cut 20,000 more jobs over the next 2 years to become more nimble and quick. But that's not going to help them when you make bad investment risks in countries like Argentina and Russia.
Yeah.
Thank you, because that's where I was going with it.
And the restructuring cost them $780 million just for that quarter alone.
Well, that's because all the buyouts and severance packages you have to offer people to kind of be fair and reasonable and have a heart, right?
Okay. Yeah. So we got.
I mean, you don't have to do that.
We didn't even have an argument on it. Huh.
We did it to per se, but I mean, you started off with our back and forth before the show. Just so listeners listening, before the show, Brandon was a lot more harsh on JP Morgan in my turn and from my perception than he was here in the actual recording of the show, because I was like, whoa, JP Morgan did actually very well, especially relative to all the other banks. Citigroup did awful.
Yeah, so here's what you have to do. If you get these initial earnings numbers that, come across the board, don't react to them right away. Listen to the conference calls and get your information before you make any decisions based on it, because JP Morgan dropped initially because of this. Wells Fargo dropped too, but they've got their own problems going on. I mean, they're right there with Citigroup as far as being a dog with fleas. But if you would have just held out and wait for the information, maybe you would have bought more on that drop, actually.
So, yeah, and this is what I'm talking about. You should be selling the news. You should already be owning the company, thinking that if you believe in the company and the fundamentals, going into it, understand that they have to pay back this money to the government, and then that's going to be an issue. Now, one other thing I want to point about the banks to keep in mind, see if I can find this here. I saved this because I didn't know we we're going to go into the bank so much, but I already had this pulled up at one point, but I got to find the actual number. So some of these other banks were having losses here, and one of them went into details like where all these losses are coming from, what is going to happen with it, and some of them was here it is, charge-offs. It was charge-offs at Bank of America. It was the biggest consumer bank in the nation here. Their charge-off rose to $1.2 billion from $930 million in the third quarter, and it was mainly from credit cards and office or commercial real estate. And that has been what I've been saying. It might bring down some of these numbers and earnings for these banks is commercial and office real estate.
Yeah. The other thing to keep in mind, too, is that we've got a potential of 3 interest rates cuts coming this year. Maybe some people are even saying that might start in March, which is wild to me. But that's going to be very tough comparables next year for the banks. Given the high interest rates right now, and if we cut the interest rates, it's going to cut a little bit into their profits going into next year. So,
well, all right. So I think you're reading my article list I had for you, because I had the article about all the bank stuff as one of my articles. Here's my other article. You ready?
Yeah.
Top Fed official warns against hasty rate cuts amidst inflation fluctuations. I think we're reading the same stuff, Brandon. But let me talk about this since you brought it up, right? Yeah. So this senior Federal Reserve person actually on record here is Raphael Bostic of the Atlantic Fed. Basically, he's saying that policymakers decide to cut rates too hastily. This warning arrives amidst gradual declines towards the central bank's 2% target. He goes on to say, Bostic's comments came prior to December consumer price index reading, which showed the headline inflation inching up to 3.4 from 3.1 in November. So it inched up a little in December, 1st November. So that's not good.
No.
According to Bostic, while price pressures fell more quickly than anticipated, he still believes inflation will hover around 2.5% by the end of this year and only reach the Fed's target in 2025, which is why he's making the case that we can't start cutting rates just now. He's also noting that the disruptions in the shipping traffic in the Suez Canal due to the Houthis attacking vessels, they have led to a nearly 150% increase in the cost of shipping a 40-foot container, which is going to add to inflation,
Yeah.
which is why he's saying we can't start cutting now. He also reiterated that despite the current unemployment rates at 3.7%, the labor market is still strong enough that the Fed's focus should remain on inflation rather than job creation. We don't need to worry about job creation at 3.7% unemployment rate. That's most likely people retiring, people switching jobs, or a lot of other of these job cuts going in effect. There's a lot of reasons why you would be around the 3% mark. So all these reasons is what Bostic is listing out here and saying, hey, we don't need to be doing a rate cut. I like to know that there's a person like this on the Fed, even if they vote against him. The fact that he's saying these things at least lets me know that they're taking everything into consideration. Brandon.
Yeah, well, the consensus on the Fed is that they can't do much about the price of shipping. That's the consensus, which I think is false because they can decrease the demand for it. I don't know that decreasing the demand so much to bring down, the shipping back to normal prices because of that is warranted, but at least to keep a lid on it is a good idea. And I do agree that March would definitely be way too early to raise interest rates. That is George W. Bush in front of the victory flag in Iraq. That is what that is to me. That is not trying to be political, but it's too early to be waving the victory flag on that. And that's um Powell said that's not what he's doing, but it certainly seems like it is.
It seems like to me that Powell is playing politics here, and
Yeah,
I don't like it because you're playing politics with my money and my investments and the U.S. economy, and that's not what your job is meant to be doing.
right.
So I disagree with that. I like the fact that Bostic's out here saying this, giving these other point of views, and we need to really put out those other point of views and say, hey, slow down, take
Mhm.
your time, make sure what you're doing is correct. Now, I trust that the Federal Reserve has smarter people than me and you, Brandon, working for them that are crunching through these numbers and giving them everything they need to get. But I really hope they're listening to all the numbers and letting the
Yeah,
numbers and the data tell you what to do and not the politics.
I do too. And now here's another group of people that I want to slow down a little bit, and that's the CEOs of companies that are now, I think, getting a little bit ahead of themselves and starting to announce all these deals because they expect interest rates to come down. BlackRock is now buying infrastructure firm Global Infrastructure Partners for $12.5 billion. That's been
Which
announced.
gives go ahead.
We got a mega IPO in the works of Shein, which is a Chinese fashion company. Hewlett Packard just announced that they're going to strike a deal for Juniper Networks, which I'm going to get into here in a minute. It looks like deal making. Norvitus is in advanced talks to buy Cytokinetics. So we've got after a year of silence on M&A, decent amount of companies here coming out and announcing that that they're going to make a deal. Synopsys and Anesys, I might not be pronouncing that correctly. $35 billion deal there coming as soon as next week. A lot has hit the news in the M&A activity just in the past couple of weeks since the Federal Reserve signaled a few rate cuts coming, and maybe slow down on that a little bit because the future is a little bit in question right now.
All right, so I want, there's a lot of deals. I don't know if we should slow down because BlackRock has the money to spare. So I want to take these as a case by case basis. Let's go back to the BlackRock deal you're talking about, and it's with Global Infrastructure Partners,
Yeah.
$12.5 billion deal. It's $3 million in cash and $12 million in BlackRock shares. That's what they're going to put into this deal. So GIP people are going to get a lot of shares here. But once it closes, it's they're going to hold BlackRock is going to have a lot of U.S. liquefied natural gas export market. So I don't know if that was the point, but they're also going to have wastewater services in France, and actual parts of airport, the Gatwick Airport in London, England. They're going to have a part of that, and they're going to have a big, huge. Where is it at here? It is the Port of Melbourne. The Port of Melbourne, Australia, is going to be BlackRock owned.
Oh wow.
So to me, that's really important. Is that they're making a big jump here into shipping, and to me, the liquefied natural gas export is I don't know. Are they trying to get into shipping natural gas over to Europe? Since there's a move here in the United States to get away from natural gas, but Europe still depends upon it, and they can't get it from Russia. Is BlackRock trying to ship it to Europe?
Oh yeah, I'm sure.
I guess.
I'm
Go
sure.
ahead.
I'm absolutely sure. I'm
Yeah,
absolutely sure of it. It just seems like some of these companies are thinking, "Oh, 3 rate cuts. Here comes the free money party again," and we're,
but
we're not exactly there yet.
but that's if you're doing off of loans, and that's why I said you got to take these on the case by case. I brought BlackRock up
That's true.
because they're not using the loan; it's cash. It's
Yeah, that's
cash
true.
and stock.
Yeah,
So there's no loan. So they don't need that. They don't care about the interest rate when there is no loan.
I mean, they care about the market price. So if the stock market falls, then But I think the bet here is 3 interest rate cuts means huge bullish year for the S&P 500.
Does it though?
Not necessarily, but I think that's what the bet is.
See, you and I are thinking back to 2008, 2009, when they started cutting rates, and then everybody was cheering it, and they put the market in a nice, fantastic mood, and you saw that big V in the stock market, and we remember those great times. I don't know if interest rate cuts have the same effect as it did during that year, like to that extreme. I believe that, yeah, it's designed to loosen money so that it can help the broader market. That's what it's designed to do, but I don't know if we're gonna have that V shape that we saw back then.
No, I don't think so either. I mean, this year might be okay, but we'll see. We'll find out.
Well, how is January going? Because
It's
remember,
gonna
I
be,
said the January barometer. How is
yeah.
January?
Okay. Well, so let's just because something has happened in the past and followed a certain pattern in the past doesn't mean that it's going to continue in the future, but it's a good indicator.
80 over 86% of the time, wasn't it? Wasn't that the stat that I read?
I think it was, yeah.
Yeah, that's a pretty good barometer. That's pretty accurate, man. It's pretty accurate. So I mean, when I look at that, I mean, January's not over with, so we don't know how it's going to end. But I mean, right now it's kind of mixed. So are we going to have a mixed year? You have to be selective about what you invest in.
Always.
Yeah, you should always be that way. You should always be that way. There's a great article on this website called chinchillapicking.com, and it's about how to value a company.
Yes, written by me. And I do want to say this real quick. I actually didn't read any of the articles you were talking about. I was just going off my macroeconomic knowledge based on what should happen off of the things that I've learned from reading and, college classes and things like that. But Texas-based, we'll just get right into the HP. Hewlett Packard Enterprise is buying Juniper Networks. It's going to be $40 a share. And let's clarify this. If you're looking at Hewlett Packard Enterprise, that's HPE rather than HP. The two companies split back in 2015. HP is the printer and computer company. HPE is the cloud company. This is a $14 billion deal to buy Juniper Networks. And this is kind of a big bet on networking and artificial intelligence. The companies unveiled the transaction late on Tuesday, according to the Wall Street Journal, and they said that the deal was close to being closed. Texas-based HPE, I don't know how, if that's a very subjective term. Sometimes they say this and it's a year, down the road before they close the deal, but we'll find out, I guess, in the future here. Got a little pop-up here blocking my notes. Okay. Texas-based Hewlett Packard Enterprise will pay that, like I said, $40 in cash for Juniper. This is a 32% premium to where the stock was trading before the report. Right now, we're at about 6% lower than that $40 per share on Juniper. So, I mean, if you want to jump in and try to get that 6% before the year's over, I wouldn't blame you for that. But HPE, they're a cloud services provider, and their customers range from small businesses to large corporations and governments. They're now based Juniper is based in Sunnyvale, California. They sell communications, network services, and equipment like routers and switches to technology and communications and financial customers. Now, here's the interesting thing about this, because we covered a acquisition that was very similar to this in the past, and I think that this is a response to it. Cisco bought Splunk, right? So back in September, we talked about this on a previous show. Cisco had announced their acquisition of Splunk. Splunk provides security, information, and event management, and their data management company. And they've grown substantially just over other areas of cyber security and financials. Cisco is known for hardware and routers. Splunk is known for cloud data. HPE is known for cloud data. Okay. Juniper is known for hardware and routers. So I think Hewlett Packard was looking at Cisco buying Splunk, and they're like, oh, wow, now Cisco's a competitor. And now they've got hardware and switches and routers combined with Splunk, which is cloud data. We need to go ahead and buy a company that's known for, their routers and switches, so that we can stay competitive with Cisco in both areas. Cisco's acquisition of Splunk made Cisco a competitor in the cloud data realm to Hewlett Packard Enterprise. Hewlett Packard Enterprise's acquisition of Juniper, I think, is an answer to Cisco's acquisition of Splunk. Now, with that being said, I said, I'm okay with you buying Juniper. I don't think that there's going to be any reason for anybody to jump up and say that this is, there's monopolistic kind of concerns or anything like that. I'm not buying HPE though. Hewlett Packard Enterprise's cloud area, first of all, they're competing with Cisco now to, in my opinion, be not the number one company in cloud, maybe number 3, number 4. And Hewlett Packard Enterprise has had to consistently make acquisitions in order to stay competitive in this area. That's not good for shareholder value. They're spending shareholder money to buy these other companies to stay competitive in this industry. I don't like Hewlett Packard. If you bought it 5 years ago after the split, Hewlett Packard Enterprise, that is, you only made 15%. You way underperformed the market. So I don't care for Hewlett Packard, but if you want to get into Juniper and try to make a 6% over 6 months, 12 months, or whatever it's going to be, I don't have a problem with that.
I'm glad you don't have a problem with that. I'm not buying any of these companies you just named. If I'm going to go in the cloud, I'm going to go into Microsoft. I'm going to go into Google. I'm going to go to Amazon Web Services. I'm not going in any of these companies.
Yeah, I agree. They're what they're doing is they're trying to make these acquisitions. Now, Cisco, I think, might be actually better positioned, but they're trying to make these acquisitions in order to grow to the size of Amazon and Microsoft, which have been able to do it. They've done it through some acquisitions, but they've mostly been able to do it organically. And that's not been possible for Hewlett Packard Enterprise. So if they're continuously having to spend money, eat into their profits to buy other companies just to, stay competitive, that's not a good thing.
Just let me know when Cisco reports earnings, so I can short their stock ahead of it.
You know what? I think Cisco in the next 2 years, I think the Cisco and Splunk deal is actually going to be net positive for earnings, but maybe not within the next 12 to 24 months.
It doesn't matter if they have positive earnings. They consistently drop right after earnings every single time.
This is true.
Yeah. There you go. What else you got, man?
That's everything.
That's everything, really?
That's
We just burned through it.
Yeah, we just burned right through it, didn't we?
And you killed me on my articles. I only got one article left, man. If you're ready for it,
I took 25 minutes according to my timer here.
All right, well let's do my one article I got left. Since you just destroyed my other articles. This one is on Bloomberg. Bloomberg.com. The headline reads Apple to shutter 121 person San Diego AI team in reorganization. This article was written by Mark Gurman on January 13th at 11:03 p.m. Man, he's staying up late. So basically, Apple is shutting down their 121 person team related to artificial intelligence operations. They're actually moving it, and they're going to merge with a Texas portion, the Austin, Texas portion of the same team. The reason why this really just jumped out to me is that a lot of tech companies are moving to Austin, Texas, and this seems to be a new hub away from the tech sector outside of San Francisco and other areas, but the group also has offices in China, India, Ireland, and Spain. They're all responsible for improving Siri by listening to queries to the voice service and determine if it heard and handled questions accurately. So they just closed the San Diego one for now, but they are planning to go ahead and try to consolidate a little bit more and get the biggest hub to be in Austin, Texas. Apple currently has 161,000 employees as of September, and mostly managed to avoid layoffs since the pandemic, in contrast to its peers who have drastically cut in order to maintain these profit ratings. Your thoughts, Brandon?
Well, I wish that Amazon would do something with Alexa because my Alexa's an idiot. Sorry if I just set off everybody's Alexa devices 3 times just there. But yeah, you know what? I think that there's kind of I wouldn't say a panic, but there's a lot of competition now going into these AI services that's making companies trying to, get their stuff together and try to figure out how they're going to be the leader in this area with so much other competition coming into it. And it's causing, companies even like Apple to say, hey, maybe we need to restructure in order to get on the right foot and to stay, ahead to where we're at right now. There's a lot of competition coming up. The market's starting to get a little bit more saturated, and they want to keep their market share.
So, you're saying that competition is breeding innovation?
Yes. And efficiency.
Yes, yes,
I
it
mean,
is.
you
And
can't say that to the 121 people that lost their jobs. It sucks for them.
it does,
But
yes.
for the overall of society,
They're going to make a faster, better product for the rest of us. Yes.
yeah.
All right. Fair enough. All right. Let's get into what I have to do. It's a follow up story on the crypto and Bitcoin announcement that I covered last week and about how it was going to come out this week. What happened? So they announced it, they put it out there. Kathy Wood's ARK fund was the first one to be able to go ahead and buy shares in the ETF. Brandon, did you buy shares in that ETF this week?
No.
You did not? Really?
No, if
What?
I ever buy anything with Kathy Wood's name on it, send me help.
I don't know. We were singing her praises back when we first started this podcast because her innovation fund was on the way up.
I don't think I was. Here's the thing.
I was singing her praises.
Okay,
I was singing her praises.
She's a very smart woman. She's a very smart woman. She's good at what she does. Her investing style is just not my investing style. It's not the same thing. I just have a different mindset about the market. So I'm not really insulting her when I say that. I'm just saying it would be really out of character for me to buy anything that she buys.
I got you. I got you. I got you. I think she made a mistake by holding some too long after the big run up and not taking some profits and sitting on some cash.
Yeah.
That's where she went wrong. But anyways, her one was the first one that had the Bitcoin ETF, and it went out last week. But the actual price of Bitcoin and other cryptocurrencies fell last week for the most part. And so you may be saying, okay, this is a sign that this stuff's not going to work out. Well, again, this is a long-term moving thing. Bitcoin is going to be up based on where it was on January 1st and where it's going to be on December 31st. That's what I've said when we first started this year on our 2 podcasts we've had already, and I maintain that position. So for that perspective of a year-long or even longer goal of the cryptocurrencies, I'm not looking at these couple-day drop as anything spectacular. I'm not running for the hills. I still own my Bitcoin, but I am looking at opportunities here in the cryptocurrency world. So looking at these opportunities, you could go in there. Solana had a big run up last year. I think we've missed the boat on Solana. It's already ran up. I mean, you could buy it if you believe in it long term. However, it just surpassed Ripple. And that's something I believe actually has long term value. The Swift banking system is something you may have heard of if you follow any kind of stock investment program at one time or another. For many, many years, the Swift banking system was the way that banks, corporations, people, countries move money from one country to another. And it usually took it took some time to do. Ripple, however, can do the same thing with just a matter of 4 seconds. The reason why there's a couple of reasons why Ripple price has not gone up. Number one, there's been multiple lawsuits by the SEC, which Ripple has been winning almost every single one of them. Ripple has won all the lawsuits, and it is not a security, so it's not defined as a security, so it can't be under the SEC guidelines. It's a way to move money around the world. And secondly, because of those litigations, Ripple has not been fully utilized by countries. However, South America has come out saying that they are fully excited to go ahead and start using Ripple more often for transactions. So if I'm going to be looking at anyone to get a great return on money, it would be Ripple. Now, however, I say that in that there are still a couple open SEC lawsuits, 2 of them, that could have a huge effect on Ripple if Ripple doesn't win those last 2 as well, and that could drive the price way down. So this is a very risky, very speculative trade if you want to make it. It could pay off huge to the moon numbers, or it could be your money going down to zero. It all depends on these lawsuits with the SEC. And this, I'm afraid, is just how the cryptocurrency world still works, which is crazy to me considering how many companies have continually utilized Bitcoin or blockchain technology. Maybe you didn't know they were using cryptocurrencies, but they were using blockchain technology, which involves cryptocurrencies such as Solana and Polygon. And you have to have those on hand in order to use it. Another way, the way that Ripple would go up in value is if banks take it on, start using it for these international transactions. That means banks have to hold so much of it, and if companies and banks and people hold Ripple, the price of it goes way up fast. That's how it works. So if Ripple wins these last lawsuits, it's to the moon because countries will start using it because it's faster, quicker, cleaner than the Swift banking system. Brandon, thoughts on?
Well, I just have a little thought. The fact of the matter is that it cracks me up every time that the big banks and governments and such, they make the argument against cryptocurrency and say that it's not secure, but then they take the technology from it to secure themselves.
I know exactly what they want is they want to own it, and they can't own it, and that's the best part about these cryptocurrencies. But Ripple, they actually can because it's a company that they are eventually going to IPO at some point. So the banks will be able to own it at some point. So I again, that's more positive to me that if the banks could get a big chunk of it, then why wouldn't they want it to work out and go public if they can own it? And so to me, Ripple has the most positive outlook for big returns. But the problem is these last 2 lawsuits with the SEC. If they win those, it's to the moon, off to the races. If they don't, now it's yeah. So I mean, you have a big risk there, very big risk. So I would not put any money in that you can't see go down to zero. That would be the only caveat I would say to that. Don't put any money in that you can't see go down to zero.
Yeah, just like you're going to the casino, don't take money with you that you won't miss.
Exactly. So I mean,
But
cryptocurrencies, yeah. But as far as Bitcoin and these Bitcoin ETFs, I think the Bitcoin ETFs and Bitcoin are going to do very well this year. I see Bitcoin going up by the end of the year. It's going to be higher than where it's at now. So yes, I see Bitcoin as a buy for the 12 months of 2024. I don't see anything really too much affecting that unless there's some global world war or something. Then that might affect it.
So could it be that Jamie Dimon is only disagreeing with you publicly to keep the value of Bitcoin down while he increases his position in it? and they
Well, I
made
mean,
here
he's
from
done
that.
that before. He's done that before in the past, but like I haven't heard him say anything negative about Bitcoin or cryptocurrency in a number of months.
Yeah, well, maybe he's put his position in. I don't know, but
Yeah.
once the guys like that, once they get fully invested, then all of a sudden they're bullish.
Yeah, now all of a sudden they like it. Like BlackRock is a big fan of Bitcoin now, whereas a couple of years ago they were just saying Bitcoin's stupid and we're not going to use Bitcoin. That's for the peasants. But now BlackRock Larry Fink's on doing an interview saying, "Yeah, we have a Bitcoin ETF and we have this ETF and we're looking to move into cryptocurrencies." And he was even asked about Ripple, and he said, Ripple is one of the options that we are looking into, but he did not say yay or nay on it at this time. So. But if BlackRock puts their money behind Ripple, then woo, that's gonna send it higher.
Yeah, yeah. Well, I mean, the thing is, it's just I don't put too much stock into what these people are saying on TV. You have to kind of sort through the crap.
That is definitely one way to put it. That's
Yeah.
definitely one way to put it. All right, Brandon, I want you to give me your final thoughts because I have some final thoughts, but you always go first, so go
Well, I
ahead.
want to say how about them boys, but this is gonna post tomorrow, so you know what? I don't have to worry about it. They're gonna win. How about them Cowboys?
Oh man. All right. Fair enough. All right, so here's what I'm looking at going into this week. On Tuesday, I got the day right now. Tuesday, you have Goldman Sachs, Morgan Stanley, and PNC reporting. That's definitely a big one. On Wednesday, you have Charles Schwab, Citizens Financial, Discover Financial, U.S. Bank reporting. A lot of banks this week. On Thursday, F&B Corp reporting. First Horizon Bank, Home Bank Shares reporting. Key Corp, M&T Bank. Basically, my point I'm making is you still have more banks reporting this week. The thing to look for is how many of them and how much are they paying into this fund. Now that everybody's made aware that they all have to pay into this fund, how's it going to affect all these banks? That's definitely one thing I'm going to be looking at, especially the regional ones that report, such as Huntington, Fifth Third, Ally, PNC. Those are going to be reporting. Outside of the banks, one I'm looking at this week, and it's not so much as their earnings, it's going to be their guidance and any kind of news related to them, is JB Hunt. JB Hunt is going to be reporting on Thursday. I'm very interested to see what they say about the transportation sector right now at this time, and if they've halted all of their autonomous vehicle transportations or just in certain sectors. And then at the end of the week on Friday, Schlumberger is the one I'm going to be watching. I want to see how the oil services company is really handling everything. If they're seeing a drop in contracts and what's going on in the oil services. So that's some insights of what I have looking up on the week. Cryptocurrency is always top of my mind. But yes, if you have any questions, reach out to us, DM us, go on to chinchillapicking.com and look at that article from Brandon. It's a great article. We have a very basic website. There's not much to it, but there is a great article on there that I recommend you read. If you have any other questions, let me know. As always, we hope that we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.